Oh, hi traders. Welcome to this edition of the Trading Wave Patterns video. Since we are approaching the end of May, I thought to do a quick comparison about two main global indices in the world. That is the SP 500 and the other one is the DAX. And I have here the charts for each one of them. What I want to do is to answer a simple question. Let's assume one has $1,000 or pounds or whatever you have in as a capital, and let's compare which one by trading each of these two indices, which are the main global indices in the world. Let's see which has given us a better return. Before we go into the calculations, let's do it this way. First of all, I have here the chart for SP 500, and this is the continuous version, by the way. So it's the chart which runs 24 hours and it gets an extension outside the cash hours. It's calculated from the future prices. Now, on the 3rd of May, we reached this lowest point, 2,593, and the highest point was this spot here, which was about 2 weeks ago on the 14th of May, and it reached 2,742. And if we switch to the DAX, we had lowest point here, which was on a similar date, and it is 12,490, and then the highest point was actually reached only very recently, actually last week. So DAX, if you want, was lagging in terms of making highs, if you want, has lagged the American index, but it did reach this point, which was 13,206. 0.8, almost to 13,207. So what I'm going to do is I'm going to take out this Excel and I'm going to do some simple calculations now. So you see, I summarized here all the information I was looking on these charts. So if I come back to S&P 500 or SPX, which is the continuous version, we had the low here, 2,593, and the high 2,742. That is giving us a return of 149 points, or if you want in percentage, it's 574, almost 575. Now switching to DAX, the lowest point, as I mentioned, was 12,490. The high was 13,206. This is giving us a return so far this month, because we still have a week to go, but so far is 716 points, or as a percentage is 573. So basically, you see, the percentages are very similar, but here is what we can do as a trader. So, you know, I want to discuss these questions in terms of comparison, if you want returns, net returns on capital. So let's assume, because the question is this, you know, if you have, let's say, $1,000 or 1,000 pounds, you cannot just say you are going to take 574%, that was the increase on your capital or the expected increase, because actually what you are trading, most of the cases will be leverage instruments, and for example, options, futures, or like in Europe, you have spread betting or CFDs, contracts for differences, and so on. So the way I'm going to discuss this is this. Let's assume you have a contract. I mean, for S&P 500, a typical contract, like the ones we have here, which are called the spread bet. It's very similar to a futures, but it's actually much lower margin. So a contract like this for S&P 500, it's 13.59, let's say 13.6 pounds or dollars or whatever you want to do it. And a contract in DAX, it's actually much higher because DAX has higher prices and it's higher, you know, a net price is much higher. So the margins to trade this by broker houses, they are asking us to pay a lot more for a contract, and it comes like 64.6 pounds or dollars or whatever. And what you can do in this case is this. If you have $1,000 or pounds, I did this example actually in pounds, but you know, the actual currency, it's less material now. You can actually buy 7.35 contracts. You can actually buy more, but I mean, this is a safe way to do it. In other words, you limit the risk, and by doing this, you are actually using only 10% of total capital. So you put down in margin only 10%, because remember, these are contract leverage instruments. So assuming you buy 735 contracts, then you are actually going to get a return of 1,096, almost 1,100 pounds. In other words, you started with 1,000 and you are actually doubling your return. You're doubling your capital, making a return even more than the starting capital. And if you do the same calculation in DAX, you preserve again only 10% of your capital used in margin. So you still have 10%, you still have 90% free. Then by the same token of calculations, you will get that the return is 1,108. Now, these are very similar results because, of course, the percentages over the months so far are very similar. But the way this goes is to show you that you can do this kind of quick calculations. And I think it's very useful to have them available so that you can compare which one of the markets are easier to trade, and you know, to make plans ahead on trading. Obviously, this is just for 1 month, and if you want to draw continuous comparison, then I would suggest one should go back to previous months and obviously then look at the similar calculations and see which one comes on top. Usually the DAX, it's giving better returns, higher returns, but it also has high risk in a way. That means it has and is showing a lot more volatility between the lowest and the highest points. But nevertheless, for May and so far, they show absolutely and very close similar results. And that means you know, you could have stick to one or the other and basically ended up so far with the almost the same result. Now here is the question for you. Maybe you can think about this. Is anyone who has managed to keep an entry, let's say at the lowest point, like it was here or maybe here, and has he managed to get out around the top value? Now, believe it or not, but the fractal waves, which is the method I'm using to trade, as giving us a very good entry like we had here in DAX. And I had the calculation of 13,200. Of course, it was exceeded by 6 points, but we had the calculation. And basically, you know, we knew that this is the range which is needed to trade and the kind of return I was expecting to get. We actually had also we have even more refined method by which I can get intermediate exits and then intermediate re-entries, so I can even maximize a lot more and optimize these trades. But if you want to experience and get this kind of returns and to have a very successful trading, just visit our website and apply to trade. There is even an offer right now by which you have 3 days free trading, so you can actually experience firsthand and see the power of the fractal waves. So I hope you found this video interesting, useful to improve your trading style and the way you should go calculating returns and making plans. And if you have other suggestions, what kind of topics we would like to be covered in the future material, just let me know. All right, have a good weekend and enjoy the trading next week.